All right, viewers of The Glenn Show, I want you to know that I am with the economist Laurence Kotlikoff, who's professor at Boston University. He's an old friend of mine. He was the best man at my wedding. I must say, he did a great job doing that particular service for me and my bride, and it was a wonderful experience. But in any case, we're not here to talk about that. We're not even here to talk about me. This is Glenn Loury, Brown University, The Glenn Show at bloggingheads.tv, which comes to you from the Watson Institute for International and Public Affairs at Brown, where I have an affiliation. And I, as I've said, I'm talking with Laurence Kotlikoff, who is a first-rate economist, a prolific writer about economic policy. You find his columns in Forbes magazine and other places. If you go to kotlikoff.net, that's KOTLIKOFF.net, you will be overwhelmed with the range of his writings on everything having to do with economic policy, financial planning. Man, I read those pieces about alimony and child support. Larry has a company that puts out software to help couples figure out what their alimony agreement should be based on their goals and their values and things like that. I was impressed with that. Larry is all over the place on economic matters. He's at Boston University, professor there. Welcome to The Glenn Show, Larry.
Thanks for having me, Glenn. Great to be back.
Yeah, you're going to be a regular because the economy, and I mean, help us figure out. I am an economist, but I'm really not the kind of economist who stays abreast on a day to week to month basis with the economic policy debates that are going on about trade and tariffs, about taxes and equity and whatnot. I read, but don't produce that kind of research. You produce that kind of research and are well situated to enlighten me and the audience on what's going on. So Trump is president. Obama used to be president. Trump is president. We're going on almost 2 years now. And he came to town with certain rhetoric, okay? He said that the immigrants were coming, they were taking people's jobs, and they were bringing criminals. He was going to stop it and build a wall, and Mexico was going to pay for it. He said that the U.S. was getting our lunch eaten in one venue after another of international economic relations, of trade policies, and he was going to fix that. He was going to get tough with the Chinese. He made Peter Navarro his White House guru on trade policy. And now he's starting trade wars across the board. He's gotten tough with the European Union, and he's told the Europeans he doesn't like NAFTA. He wants to renegotiate it. He pulled out of the Trans-Pacific Partnership. He pulled out of the Paris Climate Accords. Trump has come to town. There's a new sheriff in town. There's new economic policy. He and the Republican Congress, I think without a single Democratic vote in either house, enacted a massive tax reform legislative package. It has been much maligned in some quarters and much touted in others. And meanwhile, and I'll stop this because you're the guest, but I just wanted to set the stage. Meanwhile, unemployment is down at historic lows for various demographic groups and for the workforce as a whole. Meanwhile, first quarter growth numbers over 4% per annum growth touted by the administration as proof that their policies are working. Meanwhile, stock market up at, I don't know where it is now, 25,000, the Dow or something like that. It was like 18,000 when Trump came into office less than 2 years ago. Looks like things are looking up. Looks like the economy is humming along. Looks like Trumponomics is working. Looks like we ought to all take a step back and maybe reevaluate the skepticism with which many of us greeted the arrival of a Trump administration. Meanwhile, people like Paul Krugman, you read his column in the New York Times. He's death on this administration. The tax cuts are the worst thing in the world. It's all about fat cats and whatnot. You read Lawrence Summers, he's talking about secular stagnation or whatever he's talking about, and doesn't believe that the growth numbers are real or whatever. Anyway, that's the environment that I find myself confused in, and reporting in the press is so archly partisan, pro or anti, that I don't know what to believe. And so, looking for guidance, I'm calling on you, Larry. What do you have to say?
Well, I think there's lots, some things that the administration has done that will stimulate the economy. I think the tax reform I give it a B minus, but I'm a pretty tough grader. So I think on balance, it's going to help the economy grow at a pretty good clip for a number of years. And so we saw a 4.1% growth rate in the last quarter. The first quarter of the year was just about 2%. So those aren't bad numbers for this year.
Okay, so it was the second quarter that the 4.1% annual growth rate was manifest. I stand corrected.
Yeah. Now the negative here is that real wages haven't really gone up at all over the last 12 months. If you look at the BLS data, Bureau of Labor Statistics data, it looks like the wages of nominal wages have gone up by 2.8%, or nominal, they've gone up about that much, 2.8%, but inflation's been 2.8% as well. So this problem that we've been having over the long term of real wages not rising for typical workers continues. The inflation rate is heading up. It was more around 2% before Trump took office. Now we're up to close to 3%. Interest rates are going up. So there's some clouds on the horizon. We don't want to have a 5% inflation rate that's going to require the Fed to step on the brakes, and we'll have a recession. So that's a concern. You do have corporate earnings. The stock market actually has boomed since Trump took office, but but now it's also come back down. So if I was just looking, as you were talking at the intro here right now, Glenn, in real time at the Dow Jones, and it looks to be lower than it was before Trump took office. If I got that right. So
I'm sorry, what index is lower than before Trump took office?
The Dow Jones, I'm just looking at a 10-year chart. It's, if I look back at, right now it's at 25,333. It was at 26,210 January. Oh, that was January a year ago. So actually, you're right. When he took office, which was basically February 2017, it was 20,000. So it's gone up by about 5 over 20.
And it was even lower when he was elected. There was a significant increase in the interim between his inauguration and his election.
Yeah, absolutely. So it was around 18. So it's gone up probably 30% since he's been elected. The question is whether what's driving that. A lot of people think the tax cut, or the anticipation of the tax cut, was major. But if you look at the Joint Committee on Taxation numbers, you don't see, on the tax plan that was actually enacted, you don't see a major 10-year tax reduction. It's about $30 billion a year when you look at everything on the business side of the ledger. So there is a big rate reduction from, I think it was like 35% down to 21%. But the actual, there's also other taxes that went up. So people might be focused not on the, substance, but more on the, they may think that other people are looking at the headline number and they're not focused on the true picture, and therefore they're going to move into stocks or push up stocks. So we're going to do the same thing. So some of this may be animal spirits driven somewhat by misinformation. I don't want to be, a doubting Thomas too much here, because I think the story is that if you simulate the tax reform, you do see a significant improvement in the economy over about a 10-year period, arising about a 15% increase in the capital stock and the amount of investment that has, the capital that's been invested in the U.S.
Yeah.
And you have about a 5.5% increase in real wages. So this may be the beginning of this influx of foreign capital that we would anticipate from the tax reform. On the other hand, you have, as you talked about, the tariffs, which could produce we've already had a significant trade war that's been started in certain areas, and now we're talking about Trump's talking about a $200 billion worth of tariffs, or tariffs on $200 billion worth of Chinese imports. The Chinese are not going to back down. The Europeans, if we start putting tariffs up on them, beyond what we've already done. They're not going to back down. The Japanese won't back. Nobody's going to back down because they're going to lose political face. So he's playing a losing game here. And he seems to want to do that in order to win the election in 2018 and for the House. I don't think that's going to be a winning strategy. It's a risky strategy. It might work for him, but it's not going to work for the economy having another $200 billion of Chinese goods being hit with higher tariffs. That's going to put everybody in the mind frame that this trade war is real, and that's going to sink the market and could produce a recession. So I'm very concerned about that. That's why I called him an economic trader. I think he's a trader on every front that you can think about when it comes to the U.S., to our country, whether it's, whatever values you want to consider. I think he qualifies as a trader. Whether or not he's literally a Russian agent, as many people suspect or not, is a little bit besides the point. What he's done to our national conversation, our democracy, our press, our security apparatus, our justice system, all these things are sufficient. His remarks on all these areas are sufficient to call him a traitor. But just if you focus on the economics, putting us into a trade war for no clear purpose except to perhaps throw red meat to his base is not a clever move.
With respect, Larry, didn't invite you on for political commentary about the president and partisan bickering back and forth. I think trader's a pretty strong word. He can be misguided. He can be misguided about trade policy. He can be misguided about tax policy or immigration policy. Trader's a pretty strong word. But in any case, I think we might want to agree to disagree about it. Traitor? He's a traitor? Come on, man.
One of the criteria for impeaching a president is abuse of assets. The biggest asset we have in our country is the U.S. economy. If you take the U.S. economy and start abusing it by putting on tariff, the guy is making no sense.
I hear you. And if you were to legislate a $20 an hour minimum wage, if you were going to be Kamala Harris or the Democratic Socialist Bernard Sanders, and you were going to put in a Medicare for all healthcare system, if you were going to be a union Democrat and you were going to slap tariffs on anything that hurt an industry that had a unionized workforce, I doubt very seriously whether Laurence Kotlikoff would be calling that person a traitor.
Well, the original title...
He would just be saying that person was misguided with respect to a minimum wage of $20 an hour was bad policy.
Well, let me be clear. I wrote
the steel coming from, et cetera. That's what he would be saying.
I hear you're going. I wrote the column for Forbes, and it was called "Let's Call Trump by His Real Name -Traitor." And then I went through the political arguments for why I think he's a traitor, and then I talked about the economics. And then the editor decided to make it economic traitor in the title because that was their prerogative. So I do think he's a traitor when you put everything together. Whether economics by itself would be sufficient for me to give him that designation, I don't know.
No, I don't want to argue with you about Trump one way or the other. I certainly don't want to be in a position of defending Trump on any score. I do want to talk about the economy, though, because you think the tax bill is a good thing on the whole. B- is, if y'all don't know, I know Larry Kotlikoff. I've known him for a long time. That's a good grade from Larry. It's not an A, but it's a hard grade to get. Okay, it's probably at or above the median grades that he's going to be giving. So you think there could be economic growth? Your projections are telling you that real wages should tick up, even though they haven't done so as yet. You're a little bit worried about inflation. I didn't hear you say anything about the deficit implications of the tax bill. Maybe you don't think that's a serious problem. Corporations are repatriating earnings. They are buying back shares from their shareholders. I heard Ralph Nader the other day decrying that practice. He wants Apple to spend its money on social justice initiatives rather than giving the money back to its shareholders. I thought that was pretty crazy. I thought the money belonged to the shareholders, and if Apple didn't have anything good to invest it in, give it to the shareholders and let them invest it in what they want to invest it in, I thought. I would assume that you'd agree with that kind of thing.
Well, I would agree, Glenn. I'm not. I do think that the buybacks of the shares may be raising earnings per share, and that may be also misleading the market as to how well the economy is doing. because the growth of the stock market is being driven by earnings per share. So, so there's that question. And then there's also some tax provisioning that has led to higher earnings per share, and whether that was done accurately. So there's a couple of question marks about this earning growth data that has driven the stock market. But in general, I do think that this tax reform is going to help the economy. Should raise over about 10 years real wages by about 5.5%. It can't help but lead to a lot more investment in the U.S. when you lower the effective marginal tax rate on investing in the U.S. under some estimates from about 33% to about 18%, the effective marginal tax rate. So the U.S. is going to look a lot cheaper over time to foreign investors. So I'm just saying there's that, but then we have the trade wars, which is a big question mark on the overall picture. I also think that the tax reform, a lot of people on the left are saying the tax reform was highly regressive, that 82% of the tax benefits are going to the rich, the top 1%. I just did a paper with Alan Auerbach. It's on my website called the Tax Reform Act of 2017, Winners and Losers. It shows that only about, if you look at 40-year-olds, less than 10% of the tax gains are going to the top 1% if you do the analysis correctly. So I think the tax reform actually was essentially as progressive as the current system. I don't think we have a much less fair system than we had before when you do the analysis correctly. So you know,
Can I just stop you there? I'm going to just stop you there for a minute, Larry. I think this point is very important. So the rhetoric, at least from the left, is tax cut for the rich, peanuts for the poor. You and Alan Auerbach, University of California, Berkeley, frequent co-author of yours, have an analysis in which you say, if you do the calculation correctly, and I want you to explain to people what that means, you get it as being much less regressive than popular wisdom would have. And that seems a really important point. This is a neutral source of analysis, people. That Laurence Kotlikoff is not working for any political party. He's just trying to be a good economist. And he says that the Republican tax cut is not, I repeat, is not mainly a tax cut for the rich, that the benefits are widely dispersed if measured properly. Can you just explain to the audience what you mean by that? Okay,
well, the way the committees of Congress and like the Joint Committee on Taxation and the Congressional Budget Office, the different agencies within Congress are calculating tax progressivity, and also the think tanks in Washington, like the Tax Policy Institute or the Tax Foundation, they're all doing the analysis in a manner which, from the perspective of economic theory, is screwed up, badly screwed up. So what they do is the same kind of analysis they did back in 1940 or 50 when they didn't have much data and they didn't have the right software to do the thing correctly. What they do is they focus just on people's current income, and they classify you as rich versus poor based on your current income. So if you're Warren Buffett, Glenn, and you have a lot of capital losses this year and you realize them, and so you have no positive income, you're going to be classified by this analysis as being very poor, even though you're super wealthy. So what we want to do is classify people by their remaining lifetime resources, their human wealth and their net wealth. The human wealth is the value of all their future labor income valued in the present. And the net wealth, obviously, is their net financial wealth and any home equity, any real asset, any equity in real estate. So that's somebody's real resources. And they're not going to pay taxes just over this second or this minute or this year. They're going to pay taxes over the rest of their life. So we want to look at their remaining lifetime net taxes, net of any transfers they're going to get, any benefits.
Yeah.
Those remaining lifetime net taxes valued in the present value of that, and compare that with the present value of the resources. So take the ratio, figure out a remaining lifetime net tax rate, and then do not also, so now you've got Warren Buffett properly classified as super rich because you're including his net wealth, right? But then you don't want to take somebody's Warren Buffett who's 80 or in the 80s, and compare him with somebody who's in the 20s, because Warren's already paid a whole lot of taxes over his lifetime. Somebody who's in their 20s is going to pay taxes over their lifetime. So it's like comparing apples and oranges. You want to do this analysis cohort by cohort, birth group by birth group. So if you look at the top, at the 40-year-olds, if you look at the top 1%, and you do the analysis correctly, the top 1% have about 25% of their cohort's wealth, their net wealth, but they only account for 12.9% of their cohort spending, because they pay a lot more taxes than the poor do, and the poor get transfer payments just like the rich. So if you add the fiscal progressivity to this analysis, and you also look at labor income, human wealth, which is more equally distributed than net wealth, you find that the top 1% are only getting to consume 12.9%, not 25% of the total spending of the cohort. So progressivity, regressivity, if you like, or fairness, the picture changes by 50% dramatically when you look at the right numbers, which is spending, not just wealth. You remember this guy Thomas Piketty, our French colleague, and who wrote this book about copper in the
21st century.
21st century, who kind of portrayed himself as the next coming of Marx. Well, he was focused just on primarily on wealth, and he left out human wealth. So he's focused on net wealth, not human wealth, and not the fiscal system. So when you put everything together, the picture is dramatically different from what he suggests. So you do that analysis for the tax law before the reform in 2017 and the tax law after the reform. You do the inequality analysis. You find that 12.9% share of spending of the top 1% doesn't change. It's the same. So the spending inequality, lifetime remaining spending inequality, cohort by cohort, is no different under the new tax law than it was before. So this was a tax reform. I'm not saying that this was, how much Trump had to do with this tax reform is an open question. It was there. The oranges of it were there before he was elected. It really came from the House Ways and Means Committee. It wasn't the best tax reform, but it is fair as we measure progressivity. In absolute terms, the rich top 1% get a whole lot more than the poor, because they could get a $100,000 tax break, the poor could get a $20,000 tax break, because the rich pay so much more in taxes. So if you're going to cut taxes by the same percentage for everybody, yeah, it's going to look in absolute terms extremely unequal, but we don't measure inequality that way as professional economists. We look at shares of remaining lifetime spending. That's the way to do it. On that basis, things haven't really changed. So I think the tax reform was good for the economy. I think it was fair. It wasn't my preferred reform. I think we have tons of inequality. I think we also needed to have a tax reform that raised revenues dramatically, because the country's dead broke. You raise the issue of the deficit.
Yeah.
Well, we're now running a $1 trillion deficit, and we had, this is a Republican administration, Congress. They're supposed to be fiscal conservatives. Well, we saw from Bush Jr. that he was anything but a fiscal conservative, and this president and his administration is, if anything, heading down the same path. Let's cut taxes more.
The national debt doubled under President Obama's tenure as well. That should be pointed out.
No, he also, and I criticized every year for that. And Obama, I give him about a B- on the economy.
Yeah.
Maybe a C. I don't think he was a whole lot better than Bush. But Obamacare was a significant improvement in our situation. Cutting that to shreds through a series of different acts, I think, is economic treason. It's a part of economic treason. So that's another reason I'm so upset by what this administration is doing. You cannot put 50 million people back under the uninsured category, including 8 million children. You're putting them at total financial jeopardy. If they earn any money and they save it, and then they get break a leg and they're not insured, could wipe out their savings. This is not the way a modern, fair economy operates. So it's That's a scandal. That's a disgrace. In Yiddish, we say that's a shunda. This is terrible to treat people this way. So there's some pluses here. Let's hope the economy keeps growing and that it somehow starts ultimately to translate into real wage growth. But if Trump thinks he can win a trade war, nobody can win a trade war. And if he thinks the deficit, the trade deficit, is a measure of our getting beat in a trade war in our trading relationships, that's just something that any first-year student and undergraduate in trade would learn is ridiculous, because our trade deficit reflects the fact that we are not saving as a nation. We're consuming, and we're not therefore having any money to save, and therefore we're not investing in our country. So other countries are investing in our country because we're not taking up the investment opportunities. And that's been true for decades now. And what's been going on is that they're bringing their investment goods into our countries, treated in our accounts as an import, and that's why it shows up as a trade deficit. So it's really, you talk to anybody who trade theory and economics of kind of account and trade deficits, they'll tell you immediately that this is due to our national.
I just wanted to back us up a little bit on the tax reform issue. You say you think from an economic growth point of view, it's on the whole not a bad thing, and from an equity point of view, it's fair in the sense that it's neutral in terms of how the benefits are distributed. That's already a departure from conventional wisdom. I think it's worth people to hear. On the trade situation, you say two things. One is, let's get the appropriate measurement right as to what our whether or not we're being, quote, taken advantage of, close quote, or exploited, close quote, in trade. And a country-by-country deficit, which is the thing that the president always touts, we buy this much of Chinese goods, they buy this much of our goods, is the wrong way to look at it, and it misses a fundamental point. And you also say you can't win a trade war, and I want to actually push you a little bit on that. Why not? I mean,
Riley, my cat.
We've got the cat in the picture. Very good. Nice to meet the cat.
Yeah.
Why not? Why can't you win a trade war? Somebody has to blink? You say they're not going to back down. How do you know they're not going to back down, et cetera? Are there no issues of the sort that Wilbur Ross and Larry Kudlow and whatnot are advising the president about in terms of intellectual property, in terms of opening of markets in China to U.S. goods, in terms of the relatively higher tariffs that they have on our stuff? And is that all? They're making that stuff up. The Chinese don't have anything to give in a bilateral negotiation with the United States about trade. Are you content with the way in which the Chinese are managing their international trade relations with the United States?
Well, I think both countries are engaged in unfair trade practices. You know, we're blocking a lot of Chinese investments in the U.S. The Chinese have been trying to, when they acquire when a company does invest in China, they require 51% Chinese ownership, and they also require full rights to the technology. So they are focused in ways that other countries are not in acquiring technological advantages over their. Now, companies have nonetheless invested in China on this basis because they saw a huge market. What I'm saying is that we should fight that fight. China has some gripes with us that are legitimate. We have some significant gripes with them, but we should be fighting that fight in the World Trade Organization. We shouldn't be trying to blow up the World Trade Organization by unilaterally declaring it null and void and imposing tariffs without that the Chinese are going to have to retaliate. I mean, it's not that there's, suppose somebody, you've got a problem, it's a legitimate problem with your neighbor, okay? And he's, maybe he cut down your tree. Should you then blow up his house? And then he blows it, knowing that he's going to blow up your house? No, that's what you call stupid. Our president is nothing but stupid. Really, you have to call him that because he's provided so much evidence of that. So, and his buddies have made so many stupid comments. Peter Navarro and Wilbur Wright's not an economist. That's
Ross.
Ross, yeah. Navarro is an economist. He's an economist, but it would be hard to recognize anything that he says as connected to economics because it's just making it up with no connection to economic theory. So we should have gone after that particular thing and said, look, Chinese, you guys want to invest in our country. If you do it, we're going to force you to invest in the same terms you're forcing our companies to invest in your country. So we will approve, Chinese companies investing in our country, but we're going to have access to your technology just like you've had access to ours. There are ways to proceed.
Okay, you want a proportional response.
Yes.
Cut down his bush if he cuts down my tree. Don't blow up his house and invite him to blow mine up in retaliation.
Force them to, because the Chinese cannot politically just sit back and be publicly humiliated. Trump thinks he can humiliate. If you think about the whole thing with Mexico, he made this big stink about the wall and the Mexicans being rapists coming over the border.
Yeah.
And the day he gets into office, he has this conversation with the Mexican president, and he tells the Mexican president, you have to pay for the wall because otherwise I'm going to lose face. Remember that conversation?
Yeah, I remember it.
This whole thing has been a sham that he thinks in his deluded mind, this is the way you interact with countries. Well, countries, politicians can't kneel down to Donald Trump and get reelected.
I assume what he's saying is, look, there are a lot of ways that we can hurt you, Mexico. One of them would be for you to fork over the funds for the wall, but there are other things that we can do. Don't make me do these other things because I'll lose face, and it'll be easier for you in the long run if you go along with this. So do that for me. And I assume it's a negotiation is what I assume. And I also assume that in normal administrations, we would not know the content of a private conversation between heads of state. Only in the Trump administration do people inside the bureaucracy leak that kind of information to the press. But that's a separate point. You're saying it's a stupid negotiating position with the Chinese to be talking about $200 billion worth of their goods having tariffs slapped on them because they're going to do nothing but retaliate in kind. And at the end of the day, we're going to be worse off for it.
Yeah, and you see this with companies across the country that are already either shutting down or the soy farmers in the U.S. are getting hurt dramatically. So, and now we have to bail them out to the tune of $12 billion of the taxpayer money.
I saw that.
This becomes, as I think Senator Johnson from Wisconsin said, this is like a Soviet commissars deciding which industries to subsidize. This is Soviet-era economics that we're moving gradually towards. Trump gets to choose winners and losers. And what I'm trying to get across with this conversation...
It sounds like industrial policy circa Democratic Party in the 1970s and the 1980s. I don't think we have to go all the way to the Soviet Union to get picking winners and losers. Seems to me like... Anyway, let me not...
Well, his only ideology is Trump. That's his only ideology. Or it's... Or he's an agent, or he's both.
But let me ask you something about the technology transfer, the Chinese getting intellectual property. They want technology, and they want 51% ownership in businesses doing business in China. You say U.S. businesses are signing on because there's a huge market there and there's a lot of money to be made. Feels to me like there's a kind of public goods problem here, a kind of, the wrong incentives for individual businesses because their interest getting access to the market doesn't internalize the possible damage to the U.S. economy overall. Technology didn't fall from the sky. It had to be created by investment in research and development and so on. So here we are. We have the infrastructure, the universities, the corporate R&D labs and so forth. We come up with these patents and with these ideas, but they can't stay secret if we want to sell products in China. And no individual business has any interest in protecting the overall being of the American. Pardon?
No, I agree 100% with what you're just saying, Glenn. I would have said exactly the same words. And my view is that we need to give China a taste of their own medicine, which is if they're burning down our trees, we should burn down their tree, but we're not bombing the house. Which is now that they want to invest in our country, now that they have so much saving, they do want to invest it. We and the Europeans and the Japanese and the Canadians, we should band together and tell the Chinese, either you eliminate this requirement of technology transfer and 51% ownership, or every dollar you invest in the developed world outside of China, you're going to be treated the same way. All the Chinese companies will be treated the same way. So we do have to have this is a public goods problem. This is it can't be settled by one company interacting with China. You're absolutely right. We have to deal with this, but we can't do it via a madman. We can't have a crazy person fix this problem. Obama should have fixed it. GW should have fixed it. Clinton should have fixed it. All these people are guilty, but Trump is not fixing it. He's just blowing up each other's house.
Okay. All right. Well,
so I'm not saying everything the man is saying is crazy or stupid. I'm saying that everything he's doing, not everything he's doing is stupid, but too many things he's doing is stupid, and too many things he's doing and saying are traitorous.
Okay. I'm going to allow you to have the last word on that, Larry.
Okay.
For the time being.
I'm not a Democrat, and I'm not a Republican. Just so your viewers understand, I just think for myself, I think as an economist, if we're not experts in politics, so my views about him being a traitor may be just put aside. People may want to just focus on what I have to say about the economy, but as economists, we really can't take sides, because otherwise we lose our right to talk about we can't sign on to anybody's dogma. But I think there's so many instances where we have a person who's moving at right angles to what our country is really about, orthogonally to our values and interests, that we have to raise the question.
That's fair enough, and you're not alone in thinking that. I know many journalists who say, as journalists, we're not supposed to take sides, and yet they also say, when the president calls the press, free press, the enemy of the people, they have to speak up, and they need to do so concertedly.
Right.
And there are other areas of policy. What do you think about the president's deregulation initiatives, which are highly touted and which I think have something to do with the reason that corporate America seems to be relatively happy with this administration? Do you think we're going to be poisoned with dirty air, dirty water, and whatnot, that the president's pushing back against the regulatory state is a bad thing?
I think you have to look at each decision, and the ones I've seen, close up, or at least through the reading about in the newspaper, don't seem to be beneficial to the country as a whole. If you tell people, "Gee, we're not going to force you to sign up for health care," then you're trying to destroy the Obamacare exchange markets and put people out. Since you have no alternative for them to get health insurance, you're trying to destroy their health insurance. So we have regulations for a reason. Some regulations are good, some are bad. You have to look at each one. We wouldn't want people to be able to run through traffic lights at will, right? That nobody would say that deregulating traffic lights was a smart idea, but that might be something that comes out of his brain. Telling coal companies that they can, let's suppose that his next regulation is coal companies can produce without any scrubbers or any kind of reduction in their emission. That could lead to, we could go back to 30, 40 years when it was very hard to breathe in LA. Would we want that?
No, of course we don't want that.
So
do we want it to take 2 or 3 years to get a permit to undertake a construction that's going to employ people and expand economic opportunity, when perhaps it could take 6 months to do that if we had a different regulatory regime?
Yeah, we have bureaucracies in our country, governmental bureaucracies that are in need of complete reform. Social Security is one of them. It's got hundreds of thousands of rules, and it's got an agency that's very bureaucratic, can't answer questions correctly half the time, takes years to get answers from them when you're appealing. So yes, there's lots of things that I think need to be fixed inside government. This government is not working well and hasn't for decades. But again, you can't just blow up the house across the street because you're concerned about the bush. You have to use discretion and you have to go after things that are real problems, not things, car emission standards. That's what he's trying to eliminate now. He'd like us to go back to 1950 standards where GM and Ford and our domestic companies can produce the dirtiest possible cars. And, we're already seeing, yesterday we had a big flood in Lynn, which is the North Shore above Boston. It was about, the major thoroughfares were 6 feet underwater. This is the third time in, I think, 3 years this has happened. This has something to do with the change in temperature, the sea level. This is not, climate change, I think, is real. So
I understand the climate threat is real. I don't understand why an economist like you, whom I respect enormously, doesn't say carbon tax instead of telling me that I need fleet-wide fuel economy standards legislated.
Well, look,
that cars have to be getting 50 miles a gallon. If we price fuel appropriately, internalizing the environmental costs, people would demand cars. They wouldn't have to legislate or regulate fuel economy standards.
So Glenn, my preferred policy, which I've written about, and it's in black and white, is to have an $80 per cubic ton of CO2 emissions carbon tax and get rid of all these other regulations.
Okay. Me too. Me too.
Yeah, so we absolutely agree. But short of, if we're not having a carbon tax, there's no chance of that. We shouldn't be eliminating the regulations that are restricting the carbon.
Okay, we're settling for the second best policy because we can't get the ideal policy.
Yeah, for the moment. I mean, I would, I'd love to be president for a week and fix the whole thing. So I'd love to have you be president, because any economist could fix this set of problems, with the exception of Peter Navarro, who's not an economist.
And we know that Larry Kudlow ain't no economist.
Yes. Yeah, but he's not quite as bad as Navarro. Let's put that
one. Larry, thanks for coming on the Glenn Show. I'm going to let you go on with your day. We'll call it a conversation for now, but have you back again soon because the issues are not going away.
Great, Glenn. My pleasure. A lot of fun. Take care.